All right, guys, welcome back for another video. In today's video, I just want to do an update to the previous trading journal entry I posted. So it looks like some of the take profit targets that I set in that previous video have been hit. We had this one right here, the base of this consolidation right here, before price broke down. This level right here, which is actually what I refer to as the point of origin, the point of release, the area where the consolidation really started to break right here and pick up pretty dramatically. That's where you saw the volatility coming in the market, and also the absolute top of the consolidation right there. We had three separate areas, and all three of those got tagged. Now we can pull up the paper trading account. So anyway, you can see the account here. It's a pretty high risk position, actually a really large position. But you can see here the different take profit targets that were hit. This is a separate trade on Euro USD that didn't work out, but pulling in some big profit on the these take profit levels. This is an area where I don't necessarily know that price is going to stop and back off from this level, but I just know that tends to be the type of area where you could see resistance come in, an area like this. So I just want to be in the habit of always taking profits, always pulling profit in the market, especially on this position. Now, this position is the lot size is a little bit over 1,000 BTC. I know that's pretty large, but it's all relative, right? So for the purposes of this video, the take profit levels were relative to this size were roughly, about 5%. So took 55 lots at each price distinction. So relative to the overall, again, it's a little bit under 5%, roughly 3 or 4%. But that gives you an idea of how, I'm not trying to pick tops in the market. I'm just trying to pull in risk as the market gives me opportunity to pull in risk. And potentially if this starts breaking down, to build a hedge that I can pull off and, in anticipation of, a little bit of a pullback. Now, all those levels got hit and price did stall. And now we can kind of zoom down on the 4 hour and kind of see where we're at. So here you kind of, you've got this consolidation forming here. We can pull everything off the chart real quick. Oops. You've got this high right here, and then you get consecutive runs above these highs. I'm not a huge fan of that signature, at least on this time frame that we're looking at. So you get these runs above these highs on diminishing, RSI. You got divergence on the RSI coming in, multiple drives. Again, you don't have a topping formation here, but this is the type of signature you would generally see before a top is put in the market. And that makes sense. I mean, because we're at the previously relevant historical area of interest right here, that you would expect this type of price behavior to start demonstrating once price reaches it on the right side of the chart. So I think this is a good example of how to contextualize how the left-hand side of the chart, historical price action interacts with current price action within the context of a larger high time frame move. So you see, you can mark off these highs right here. Let's just put a white line right there just so we know where they're at. And we're marking off different distinctions, for historical. We got our historical marked off in white. Excuse me, let me take that off. And the current marked off in blue. So you can see we run up to this historical level. That's where we kind of start basing off there. And we start consolidating, right? As where before, we were moving very impulsively, not spending a lot of time consolidating. Although this consolidation here would be a decent consolidation on a time frame like a 15-minute. On the 4 hour, it's just impulsive movement. We don't really start consolidating until we hit that significant historical price action, and then we kind of stall out there, and we get these runs, multiple runs above the highs, right? To tag stop losses. So we can mark off this high up here too. So remember, we got the RSI is rolling over. Now it's not confirmed. I think that's very important, right? This isn't necessarily confirmed as a top until you see the base broken. And where the base is put in is better seen. Sometimes it's better to just go to the intermediate time frame to take out all the noise, like the 4 hour. You see how the bodies of these candles are kind of consolidating around this level. this is, can generally be seen as the base. So I think there's a little bit of a nuanced distinction here in that, if price were to come down to, so I actually have a hedge going, and I can do this on, let's see, I've got this major position, the Bitcoin long position, USD, uh, forex position that isn't working out, but or at least isn't underwater right now. But and then we got the Bitfinex position, which again, you got to keep in mind that the size relative to the Coinbase position is extremely insignificant because I just started building this hedge, but I'm building it, in the event that, price rolls over and does put in the top. I want to have that hedge there. And then of course I'll start adding to it. So remember, this is 24 Bitcoin relative to my long position of 1,039 Bitcoin. So just want to put that in perspective. But I do have this hedge going from this level right here. So we can kind of revisit the concept we were talking about with if this, price were to top off. There's a little bit of a nuanced distinction in that if price comes down and tests this base of the consolidation, then that's probably going to offer a little bit of a support on first pass. So I would actually be trading this on first pass. So let's do this live in real time. So we'll put this take profit at 20,777 there. And that's a little bit higher than we want. But again, the idea is that, it's a take profit. So it doesn't have to be perfect. But, just for the sake of having everything line up beautifully, let's make it perfect for this video. There we go. So we'll take profit if price comes down to the base here on this hedge. Now the distinction is that, if price comes down, base is probably offers a little bit of bounce off that level. Now the distinction is if it comes down on second pass and tests that level on second pass, then this area that now is used as a take profit would actually be used as a stop loss, looking for price to, retrace the gap. So it's a little bit of a nuanced thing. I hope you guys stayed with me there, but the idea is that, of course we're getting ahead of ourselves now, but say hypothetically price were to come down here, take profit, and then I would be re-adding to the hedge at any point, any retracement further, and then adding a stop loss order here so that if price bounces up and retests this level on second pass, I'd have a stop loss order there. Of course, that's, multiple iterations ahead, but that would be how I'd be looking at it. And if that scenario played out, then you get the scenario where you've got the liquidity run above these highs right here at a previous historical level, and then you get a test throwback down in the consolidation, and then again, this is hypothetical, but under this scenario, you would have a lower high right here, right? This would be a swing high surrounded by two lower highs, and that's typically what you would see again in the scenario where this ultimately breaks down and you get a little bit of pullback. And I think something to keep in mind is that this is just a pullback, right? I'm still overwhelmingly bullish. And of course, my position sizes kind of bear that out, right? My long position is far, far greater than my short position. But I do want to, be actively building hedges just so that, if that type of scenario plays out, that I'm able to take advantage of it and able to manage the underlying position a little bit more effectively. Anyway, I hope you guys like this video. Again, if you haven't subscribed already, please make sure to subscribe, and I'll catch you guys in the next